Bitcoin has fallen below the critical $60,000 threshold for the first time in months, triggering alarm bells among investors. This price drop reflects deeper issues within the cryptocurrency market, driven by macroeconomic factors and institutional behavior. Here's what you need to know. The future trajectory of Bitcoin remains uncertain as it grapples with significant market pressures. Recently, Bitcoin struggled to maintain its footing above the critical $60,000 threshold, a psychological level that many traders view as pivotal. If it fails to reclaim this level as support, analysts warn that investors may face a steep decline toward the $55,000 to $57,000 range. This potential breakdown is exacerbated by ongoing ETF outflows, which have raised concerns about liquidity in the cryptocurrency market. The current climate of increased volatility is likely to persist as traders remain on high alert for upcoming Federal Reserve meetings and inflation reports that could sway market sentiment. In recent months, Bitcoin has faced heightened scrutiny as macroeconomic factors have come into play. Inflation rates, which have reached multi-decade highs, alongside shifts in monetary policy from the Federal Reserve, play an essential role in shaping investor behavior. Furthermore, geopolitical developments, such as U.S.-Iran diplomatic discussions, could also impact Bitcoin's trajectory. A favorable resolution in these talks might provide a boost, allowing Bitcoin to test the $61,000 to $62,000 range again. Conversely, if critical support levels, particularly around $58,000, are breached, there is a palpable risk of panic selling among investors. The impact of these dynamics cannot be understated. A downturn could shake investor confidence and deter new capital inflows, while a recovery could reignite interest in digital assets. For investors, the imperative is clear. Closely monitor ETF flow data, Federal Reserve signals, and key technical support levels. As we look ahead, the intersection of macroeconomic indicators and Bitcoin's price action will be crucial. The next few weeks will be decisive in determining whether Bitcoin can stabilize and regain upward momentum, or if it will enter a more prolonged period of decline. The path leading to today's sharp decline in Bitcoin's price has been paved with a series of macroeconomic developments over recent weeks. Throughout June, Bitcoin had been consolidating around the $64,000 mark, with many long-term holders actively accumulating the asset. This period of stability occurred despite a pause in ETF inflows, which had previously provided a bullish sentiment for cryptocurrency investors. However, the landscape began to shift dramatically with the release of inflation data, which caught market participants off guard. The higher-than-expected personal consumption expenditures index reignited fears regarding potential interest rate hikes from the Federal Reserve. These fears were compounded by a notable pause in ETF inflows that transitioned into outflows, reducing buying pressure on Bitcoin significantly. The correlation between Bitcoin and broader financial markets has become increasingly evident. A global sell-off in tech stocks has been particularly detrimental, as it has further pressured risk assets, including cryptocurrencies. Investors, wary of rising interest rates, have gravitated towards safer investments, leading to a significant withdrawal from volatile assets like Bitcoin. This confluence of factors has propelled Bitcoin from a period of relative stability into a pronounced downtrend, suggesting that the market is increasingly sensitive to macroeconomic changes. Looking ahead, analysts predict that Bitcoin's trajectory will remain closely tied to inflation data and Federal Reserve policy decisions. If inflation continues to exceed expectations, further interest rate hikes could dampen investor sentiment in the cryptocurrency market. Conversely, any signs of stabilizing inflation may restore confidence among investors, potentially reigniting interest in Bitcoin. As the market navigates these turbulent waters, the key will be to monitor economic indicators closely, as they will undoubtedly shape the future of Bitcoin and the broader cryptocurrency landscape. The recent decline of Bitcoin, slipping below the $60,000 mark, signifies a critical moment for the cryptocurrency market, reflecting deeper issues than mere price volatility. This shift is emblematic of a broader bearish sentiment that has begun to permeate the market, raising alarms among investors and analysts alike. The recent trend of exchange-traded fund (ET) outflows indicates that even institutional investors who have historically shown confidence in Bitcoin are now reevaluating their positions. This reassessment could lead to further declines, as large-scale sell-offs often create a ripple effect across the market. Breaking the crucial $60,000 support level has significant implications, as it may pave the way for potential downturns toward $55,000 or even lower. Such movements are particularly concerning because they highlight the increasing correlation between cryptocurrencies and tech stocks, suggesting that Bitcoin is now viewed as a high-risk asset. This relationship makes it particularly susceptible to broader economic shifts, such as fluctuations in interest rates or changes in investor sentiment regarding risk. For the average crypto investor, these developments raise serious concerns about increased volatility and the potential for panic selling. Should Bitcoin's price continue its downward trajectory without solid support levels, it could trigger a cascading effect, negatively impacting not only Bitcoin but the entire cryptocurrency ecosystem. This could lead to a loss of confidence among investors and further exacerbate market instability, causing widespread financial repercussions. Understanding these dynamics is essential for anyone involved in cryptocurrency investments. The current landscape suggests that macroeconomic factors are increasingly influencing Bitcoin's price movements, overshadowing traditional indicators. As investors navigate this uncertain terrain, they must remain vigilant and informed about the interplay between economic conditions and crypto valuations. Looking ahead, the cryptocurrency market faces a challenging period, with the potential for further declines if current trends persist. Analysts predict that unless Bitcoin can reclaim its footing above the critical $60,000 level, it may struggle to recover in the near term. Investors should prepare for a landscape marked by increased volatility and uncertainty as the market adjusts to these new realities. Strategic decision-making and a thorough understanding of market trends will be crucial as Bitcoin navigates these turbulent waters. In a shocking turn of events, Bitcoin dropped to a session low of $59,283, marking a decline of over 2.95% within the last 24 hours. This significant price movement has broken through the psychologically critical support level of $60,000, a threshold that many traders view as a barometer for market sentiment. Key factors driving this decline include substantial Bitcoin ETF outflows, which indicate a worrying reduction in institutional demand. Institutional investors had previously shown increasing interest in Bitcoin as a hedge against inflation, but today's outflows suggest a shift in sentiment that could signal broader market concerns. Additionally, the U.S. personal consumption expenditures inflation data released earlier today showed a higher-than-expected increase, reaching levels not seen since early 2023. This inflation data has reignited fears of potential interest rate hikes by the Federal Reserve, further complicating the investment landscape for riskier assets such as cryptocurrencies. Compounding these issues, a global sell-off in tech stocks has further dragged down speculative assets like Bitcoin, intensifying the market's bearish sentiment. This decline is particularly notable as Bitcoin was previously consolidating around $64,000 throughout June, creating expectations for stability and even growth. However, the combination of ETF outflows, rising inflation concerns, and tech stock volatility has triggered a sharp sell-off in the crypto market, leading to a breach of the $60,000 mark that could have long-lasting implications for Bitcoin's price trajectory. Analysts are now closely monitoring the situation, as the psychological impact of this drop may deter new investors and shake the confidence of existing holders. Looking ahead, the market will be scrutinizing upcoming economic indicators and any statements from the Federal Reserve regarding interest rates. If inflation continues to rise, further declines in Bitcoin and the broader cryptocurrency market could ensue, potentially testing lower support levels. Traders and investors alike will need to navigate this turbulent environment with caution, as the implications of today's movements could reverberate through the market for weeks to come. The next few days will be crucial in determining whether Bitcoin can reclaim its footing above the $60,000 threshold or if a more prolonged downturn is on the horizon. As we navigate this turbulent time for Bitcoin, what do you predict will happen next? Will the cryptocurrency reclaim its footing, or is a deeper downturn ahead? Share your thoughts in the comments and subscribe for more in-depth analyses.